guys, Zoe here. Today, we're going to take a deep dive into two different types of case interview. First, the mediocre but correct framework case, and second, the MVP offer ready case. And we're going to analyze where the key differences really come from. To get a proper evaluation, I tried doing a framework drill on MVPinterviews.com. It's a platform that I'm building with my friend that provides offer-ready quality feedback on your case interviews and also offers unlimited free drills you can practice with for a limited time. Definitely check it out.
Before we begin, could you please confirm you have a pen and paper ready?
I have them ready.
Perfect. Our client today is Cavalier Chem, a global chemicals manufacturer. They recently acquired a competitor's assets, which included a facility that makes surfactants. Surfactants are specialty chemicals used in things like laundry detergent. Cavalier Chem has very little experience with this product. The facility is currently not profitable. The client wants our help determining what to do.
Got it. Very interesting problem. So our client is Cavalier Chem. They recently purchased a surfactant factory and it's not profitable. They want to know what to do. Before we dive in, I've got a few clarifying questions.
Go ahead.
If it's not profitable, why had Cavalier Chem purchased the surfactant factory from the beginning?
It was part of a bundle acquisition. They didn't particularly want this specific facility.
Okay, makes sense. And do they have any clear goal they have in mind?
Their goal is the highest return possible in the next 5 years.
In the next 5 years, makes sense. And how's the current surfactant market?
It's a $300 million annual market, essentially a duopoly with one competitor.
Okay, duopoly. Makes sense. I'd like to take a moment to gather my thoughts. Since this is a profitability problem, I'd like to break this down into revenue and cost. For revenue, we could look at volume and price per unit. So for volume, I'd like to segment it down by product type, the distribution channel, by geography, and by customer type, and would like to see if there are any particular segments that's going through hardship. And for revenue, or also for pricing, I'd like to see if there's been any changes on that part. And in terms of costs, we can categorize that into fixed cost and variable cost. And for variable costs, we can also segment that down to volume and cost per unit as well. And good example for fixed cost would be something like rent, staff overhead, and loan interest. And some variable costs we can think of are raw materials, the delivery, commission, and direct labor. And of that, I'd like to look at the fixed cost and variable cost first and see and compare our cost to our competitors' cost. I'd like to compare our cost segments with our competitors and see if our cost is currently higher or lower. And if higher, I would like to come up with some solutions to optimize our cost.
Do you have an initial hypothesis?
My hypothesis is that since this is a duopoly market, we'll be having a similar price of surfactants, so most likely the cost would be the problem.
That is a reasonable hypothesis given the market structure. Thank you. That is the end of this quick framework drill. Let's see how it went in the review session.
This answer has gotten a score of 3.5 out of 5. This is a typical mediocre, not bad but not good answer. The feedback evaluates the response across 4 areas: the question recap, clarifying question, delivery of the framework, and the hypothesis with next steps. Looking at the detailed comments, the beginning of the response is actually quite strong. The reviewer notes that the candidate demonstrates excellent active listening and clearly understands the client's problem with recapping the question. The clarifying questions are also effective, covering important context about the client's goal and overall business model. However, the main weakness appears in a framework. The candidate relies too heavily on a generic profitability tree, which does not fully capture the broader strategic options available for the facility. Because of this, the structure feels somewhat narrow and does not explore the full range of strategic possibilities the client might consider. Another issue highlighted in feedback is the order of the approach. The candidate moves into data gathering before clearly stating the hypothesis. This requires the interviewer to prompt the candidate, which suggests that the analysis is not fully driven by a clear strategic direction. This feedback recommends placing more emphasis on structuring strategic alternatives first and proactively stating the hypothesis that will guide the analysis. Overall, the response shows solid fundamentals, especially in communication and problem understanding, but it lacks the strategic structure and hypothesis-driven thinking that would elevate it to a stronger consulting style answer. With that in mind, let's now see what the offer-ready answer really looks like.
The client wants our help determining what to do.
Okay, thanks for the problem. I'd like to start by confirming if I've understood everything correctly. So our client is global chemical manufacturer. They recently purchased a surfactants factory. Currently, it's not profitable, so they'd like to understand why and what they need to do.
That is correct.
Awesome. In that case, I have a few clarifying questions. So first and foremost, do you have any set target in a certain period of time?
The goal is to achieve the highest return possible in the next 5 years.
And why have this company purchased surfactants factory from the beginning?
It was part of a bundle deal. They didn't particularly want this specific facility.
Got it. And if they're not in the surfactants market, then what are their core business?
Their business model is 80% commodity plastics and 20% mixed downstream.
Okay. And how's the surfactants market?
It is a $300 million annual market and is a duopoly, meaning just two competitors, including us.
Makes sense. I'll take a moment to gather my thoughts.
Take your time.
Cool. So to determine what Cavalier Chem should do with the surfactants facility and really maximize the return over the next 5 years, I would evaluate the situation across 4 key areas. So first, I would assess the plant's internal economics and turnaround potential. Second, I would try to evaluate the attractiveness of the surfactants market and Cavalier Chem's competitive position. Third, I'll try to assess the strategic fit with Cavalier Chem's capabilities. And finally, I would consider strategic alternatives if the asset cannot generate strong returns under Cavalier Chem's ownership. So starting with the first one, since the facility is currently unprofitable, I would want to understand the key drivers of the revenue and cost. On the revenue side, I would look at the pricing, product mix, and capacity utilization. And on the cost side, I would evaluate manufacturing efficiency, raw material cost, labor, and overhead. The goal here would be to determine whether operational improvements could realistically make the plant profitable with the next 5-year time frame. And after, Yep, after that, since this is a $300 million market operating as a duopoly, which could imply pricing power. So I would examine the market growth, customer demand, particularly from the detergent manufacturer, and also barriers to entry. I would also want to understand the competitor's cost position and market share to see what Cavalier Chem could capture additional value in the structure. And after that, as a third lever, since the company's core business is commodity plastic and surfactants are specialty chemical, I would evaluate whether Cavalier Chem has the R&D, sales relationship, and operational expertise needed to compete effectively. I would also explore potential synergies such as shared feedstock, logistics, or customer overlaps. And if that's not an option, then finally, the strategic alternative could also be considered. So something like selling the facility, so potentially to the competitor or another specialty chemical player, or even just forming a joint venture with more experienced operator or shutting down the plant if economic cannot be improved.
That covers a lot of ground. What is your initial hypothesis?
My initial hypothesis. So given that this is a $300 million market operating as a duopoly, my hypothesis is that the market itself is attractive and likely has healthy margin, and therefore the plant's lack of profitability is probably driven by internal operational issues such as low capacity utilization or unfavorable cost structure, or just inefficient product mix rather than the poor industry economics. So if this proves to be correct with our internal analysis, Cavalier Chem may be able to significantly improve returns through some operational improvement or better pricing.
That's a well-reasoned hypothesis. Thank you. That is the end of this quick framework drill. Let's see how it went in the review session.
For the customized framework, this answer has received a score of 4.9 out of 5, which is nearly perfect and clearly offer-ready. The feedback highlights an outstanding performance in opening the case. The candidate is highly methodical and ensures a strong understanding of the situation from the very beginning. The recap is clear and structured, and the clarifying questions are both thoughtful and insightful, helping to uncover the most relevant context about the client and the problem. The framework is particularly strong. This is carefully tailored to the specifics of the case rather than relying on a generic structure. The candidate demonstrates advanced business judgment by immediately recognizing that the market operates as a duopoly and by comparing the client's commodity background with the most specialized nature of the service involved. This shows a clear ability to adapt the structure to the strategic realities of the situation. The initial hypothesis is also very well reasoned and provides a clear direction for the analysis. This helps guide the case in a focused and logical way. The only minor area for improvement mentioned in the feedback is to consistently state an explicit and actionable next step. Doing so would create an even smoother transition from the structuring phase into the analytical phase. By comparing these two answers, can you see the difference between a not bad answer and a truly great one? If you're curious about your current performance level, feel free to visit mbbinterviews.com and follow our channel for more case interview insights.